What's going on, fellow shit weasels? How you doing? Holy fuck. Today was fucking amazing. AMC up 45%, GameStop up 25%, and after hours is about to rip. So it's been a fucking fantastic day. It's really, really, I hate to use the word cathartic so much, but it's very cathartic, and it's very just fulfilling to see shit finally going in the direction that it should have been going for months. So my digressions and isms aside, I want to give a little update as to what's going on here with the algo and kind of what happened today and what to expect moving forward. So the thing that really caused the breakout, and this is the same thing that happened last week, just with different time frames, is this 200 moving average of the distribution range, right? So the distribution range is anything in red, that red cloud that you see. And that is essentially, if you're familiar with Wyckoff, that is kind of the zone where price action takes place at. Anytime you break past that, that's Composite Man or whatever fucking wishy-washy fairy tale make-believe character you want to come up with. Basically, this Composite Man is the guy who just always wins. You assume that he's at the end of every trade you make. Composite Man is selling here, and he's selling you something that's marked up because he is expecting it to lose value sometime in the future. Now, because we've been going through Wyckoff accumulation for a very long time, this markup phase is all relative. This is basically from the most recent phase that we were in, where we were down in the low 13s, teens in general. But this will begin to become exponential. So that little tidbit aside, the thing that caused us to break out is we got through this 200 moving average of those distribution ranges just at the same time as each other on AMC and GameStop. You can see that GameStop was actually already above that, and we were in the middle breaking through it. And that's where you saw the price action happen. So we initially got rejected off of it, and then we saw this little reaccumulation take place. During the stream today, I was talking about how whenever you see price get slammed, especially when you're at at the top of a range, because here we were. I got the spring right here last Friday. Then after hours kind of moved us a little bit, and then going into pre-market, we had a little bit of action, but then got slammed into our spring region. We got a buy signal, and then as we were pushing into that 200 moving average, the red line, we got another buy signal, and that's what sent us flying. So when you get slammed into a spring region, like some people just like instantly lose their shit and get all depressed and mopey about it. But this is what's called acceleration. You've heard me use this word a lot if you've been following. I'll say that the cycle's been accelerated or decelerated. This is what I mean. This is what I've been saying for over a year. I just had no way to make it tangible. So we got slammed down into the spring, and then that's when we rebounded and pushed and started soaring. Breaking this fucking line on the 5-minute gave us a 50% day. Now, look at the 4-hour. We just slammed through the 200 on the 4-hour. And the price action we got is not anywhere close to what happens when you push through a 4-hour. So just something to keep in mind. If we go back to our little intraday analysis here, everything after that was pretty much just fucking melting up. You can also see that we bounced off of the distribution range, right? So we have the red cloud again. And that's what sent us flying even more. And on top of that, our accumulation region is within the distribution region. So basically, for as much as for as much as Composite Man or the market makers or institutions, whoever, are buying, they're selling just to keep up. That's one way that you can interpret that. In general, though, this is extremely bullish. Yeah, so we bounced off, and that's what sent us flying, and this is about to do the same thing. Because of the price action here, from, 20 to 25, that's what made the clouds transition so fucking giant. It was catching up in a latent fashion. And you can also see that the distribution region crossed over the 200 MA of the distribution region moving average. Also a big deal. Same thing with GameStop, like to the T. If we go to the 1 minute, we can see exactly where things started to get a little bit more detailed, where you can kind of see what's at play. Again, we had some buy signals go off. We had one right here on GameStop that was a good catch. We fell out of the distribution range, but caught ourselves back in it, which is, again, something that's very bullish. And again, we were above it, and we fell into the region, but bounced back out. That was a buy signal. And now here we are in after hours. This is showing red, but even if we were to fall through, we have distribution waiting for us right here. So the likelihood of it bouncing would be very high because of circumstantially where we're at. Some levels to look out for going into tomorrow and the rest of the week. I'm going to pull up the 30-minute first. Pretty much you're just looking for your vanilla supports and resistances. You're going to notice that a lot of what we consider to be support and resistance is actually just Wyckoff again. So I'm going to go to the 4-hour chart. If we look at AMC, for example, so we have resistance at 30. We already broke through the resistance at 26. Everything after that is pretty much just gap up, gap up, gap up. This is clearly a Fibonacci pattern that I'm doing unintentionally. So next stop would be 30. We'd probably do our incline and whipsaw or the ice pick pattern, which is just this right here. This is your SOS, your sign of strength. We would repeat this pattern probably around this 30 range. I'm kind of leaning towards it just breaking through. I don't know that whatever is at play here would be able to keep these things down at these levels. But this is kind of what I'm thinking going forward. And then rinse and repeat. It's pretty much just distribution and reaccumulation taking place all the time. So something along the lines of this. And yeah, it's looking really fucking good. It's looking really fucking good. Let's go back to the 5-minute. Yeah, so it's fucking hook, line, and sinker. Oops. No, this is fucking great. After hours has a lot of movement in it. I think that we're gonna take off here. Let's take a look at the 1 minute actually. Yeah, there's our buy signal in after hours. And we're about to push through the distribution range. Yeah. We're fucking rocking and rolling, baby. So, everything's looking good for tomorrow. Don't be fucking discouraged if you see a little bit of a pullback. That's typical. And anytime you have a pullback, someone's typically rushing in to buy at the nearest low. One more thing is we're approaching the insanity zone. The insanity zone is something that I've talked about a little bit, and essentially this is where pretty much any indicator or any form of logic or reason pretty much goes out the window because of what price action is pushing for. The highs and the lows and the volatility that is produced by that gets to a level where you can't really apply any logic to it. It basically comes down to what computers are looking for. As in, if someone has to cover, that's when they're buying. And if someone is on the flip side of that, they might be forcing the sell. So just keep that in mind. This might be our after hours rippy right here. That's what it's looking like. Already up 2% on GameStop and 1% on AMC in after hours. I should see that buy signal hit any second now. Once this pushes over, you'll see it. So, anywho. Feels fucking good, man. It feels fucking good. been a long time. It's been a very fucking long time. So I'm gonna fucking leave it at that and keep watching this fucking money roll in. Love and appreciate all of you. Y'all take care. I'll see you tomorrow. Follow me on Twitter at TheGuyAstro. If I can come watch the live stream or whatever, we'll be live tomorrow. Yada yada yada. Bada bing, bada boom. Fuck you. Later.